Hey everyone, I'm Cryp, and welcome to the Cryp MoneyMan channel. Today, we're going to break down the big picture currently dominating global financial markets. Wall Street is bleeding red. US-China trade tensions are escalating, interest rate cuts aren't happening as expected, and even crypto, a field once thought invincible, is facing rough waters from regulations to price swings. In recent days, red has been the dominant color on the trading screens of major stock exchanges like the Dow Jones, Nasdaq, and S&P 500. This negative consensus across key indices indicates the market is under significant pressure from three main factors: concerns over the US-China trade war, disappointment that the Federal Reserve, Fed, didn't cut interest rates as expected, and finally, the persistent worry about a potential global economic recession. Trade tensions between the US and China continue to escalate in 2025, with President Donald Trump imposing unprecedentedly high tariffs on goods imported from China and other trading partners. These tariffs surged from 3% to nearly 30%, negatively impacting global supply chains and eroding investor confidence. While some temporary agreements were reached between the two nations, the lack of stability and sudden policy shifts from the US side made a sustainable market recovery difficult. Businesses and investors are now navigating a volatile and unpredictable business environment. The Federal Reserve has opted to maintain its benchmark interest rate at 4.25% for 3 consecutive policy meetings. This continuity underscores the Fed's cautious approach in navigating both global and domestic economic volatility. Nonetheless, the sustained interest rate level amid persistent inflation and decelerating economic expansion has ignited significant controversy. A segment of analysts contends that a rate cut is necessary to invigorate economic activity, whereas others express apprehension that such a move could exacerbate inflationary pressures. A confluence of economic indicators points to a looming recession. Decelerating GDP growth, an uptick in unemployment figures, and flagging consumer confidence all serve as distinct warnings. Crucially, the inversion of the U.S. Treasury yield curve phenomenon, widely considered a reliable harbinger of economic downturns, has materialized. Consequently, investors are gravitating towards traditional safe havens like government bonds and gold, inflating their values and simultaneously weighing down equity markets. The cryptocurrency market, especially Bitcoin, experienced significant volatility in 2025. While Bitcoin's price saw a slight decrease, it remained historically high, reflecting continued investor tears. However, the sector is grappling with numerous challenges from regulatory bodies. In the US, the lack of a clear legal framework has made it difficult for crypto companies to operate and expand. Meanwhile, in India, the Supreme Court has requested that the government clarify regulations related to Bitcoin transactions, indicating concerns about its use for illicit activities. Investor sentiment in 2025 was a mix of optimism for economic recovery and apprehension about potential risks. Some individual investors decided to pull out of the stock market, shifting to safe haven assets like cash and government bonds to protect their holdings from unpredictable fluctuations. Meanwhile, others maintained their market investments, trusting in the economy's long-term ability to rebound. This divergence in investment strategies reflects the uncertainty and lack of consensus regarding future economic prospects. In today's highly volatile and uncertain global financial markets, making investment decisions is harder than ever. Investors need to be cautious, diversify their portfolios, and stay informed to react quickly to market changes. Closely monitoring economic policies, especially the Fed's interest rate decisions and developments in the US-China trade war, will give investors a clearer view of market trends. Additionally, understanding the risks and opportunities in the cryptocurrency sector is crucial for making effective investment choices. Thanks for tuning in and checking out this deep dive into the current financial and crypto markets. I hope the insights and information shared here help you feel more informed and confident as you make your investment decisions in these volatile times. Don't forget to like, share, and subscribe to the channel so you don't miss our next in-depth content. If you have any questions or thoughts, feel free to leave a comment below. Let's keep the discussion going.